Hey traders, welcome to the channel, The Trading Mindset Mentor. I'm your trader and trainer, Mr. Paraskol over here. So we are going to start our live trading in the London session today. And we're going to make a lot of good pips in the market. So let's see how the market is behaving. If you have any questions, you're most welcome to put it in the comment section. Do subscribe to the channel, The Trading Mindset Mentor. We are live trading on the gold, guys. I'll be putting in live trades in front of you. Okay, so let's start. Let's see what's happening. So this was the last breakout. As we can see that the market is in uptrend direction in the over here. So what are we waiting for? We're waiting for a price to create a sell leg in the market, and then we will be looking for a buy side momentum. So let's see what will happen. Let's look at the news. Today is, I think there's a important news in the Canadian dollar. I have put up the proper video on how to analyze the news. So for this week, I have put up the video for the whole analysis of all the important news that is going to be, I think, released in this week. So do watch the Forex analysis video on the properly uploaded over here on the channel. And you will be able to understand what important news are going to be there in the market for this week and how we are able to catch some good pips over here. So let's see how the price is behaving. The price is moving towards the upside, and we are waiting for the price to take internal liquidity, and then only we will be trading towards the you can say external liquidity in the market. Yeah. So price is consolidating. The London session has started exactly at 12:30 p.m. and that's what we are waiting for. Let's see how the market behaves, and we'll be taking our first trade. So as usual, we'll be taking 5 trades for today, and in every trade, you have to remember that you have to take only 1% risk. Okay, guys, you have to take only 1% risk. And since 1% risk is there, you are going to take whatever your capital is. So I'm trading a small capital account in front of you so that you can understand how we can trade professionally on a small capital. So 1% every trade you will be risking. So maximum risk that will be for today, I think will be 5%. That means the whole thing, yeah, if the market doesn't go well and if it consolidates a lot, then we will be seeing minus 5%. And maximum profits, as you know, that we have a good liquidity SMC trading over here. So there are ratios of good higher risk rewards in the market. And we'll be filling up the trading journal along with, as you can see there, here I have created the trading journal in the market. And from the last 2 days, last two past lives, we have been making some good amount of money and have been break even as well. So last New York session was break even. Before that, we had $2 profit in the market. Okay, so right now, if you will see the it was break even on the Friday itself. So let's see how the market behaves for today, for this week. The whole week is there, and accordingly, we'll be taking the trades. So what are we waiting for right now is the price to take out internal liquidity. As you can see, what is happening over here, the price is about to take out the internal liquidity towards the downside. Once it's take out the internal liquidity, then we can expect the price to go back. So right now, if you will look over here, the price is actually in the upside direction. So if I'll zoom out, you will see that the price is basically consolidating in the Asian session. And what's happening over here is after the Asian session, when the London session started, the pre-London session started around 11:30, the price started an upward momentum. And we are expecting the price to continue towards the upside. So what will happen over here? If the price continues towards the upside, the price needs to take out the internal liquidity first. So this first trade will be the continuation trade, and accordingly we will see. So let's see if you over here, as you can see that the price has taken out the internal liquidity in the market. So now what are we waiting for? We are waiting for a buy entry, and then we will be able to take out this external liquidity. Okay, so this is the external liquidity over here. So let's see if the price creates a support over here, or if the price comes back over upside again. Okay, and this will the main internal liquidity again. Okay, so price is taken on the internal liquidity. Let's plan the first trade over here. The price goes up, we will be taking the plan trade from here, and minimum 1:1 risk reward will be there. So all the trades we will be having a minimum 1:1.25 risk reward. So let's see. Let's go for the risk calculator form, and we're going to put the stop loss entry over here and the stop loss over here. And around, I think we will be taking the risk for $5. So this is the position sizing for 0.02. You can choose your position sizing according to your own setup, guys. You don't have to copy me because you might be having a different capital. Either it may be big or it may be smaller. Doesn't matter. What matters is I'm trying to teach you over here how you are going to manage your account proper and professionally. So price is still going downside. So let's see. Okay, price went down. So we'll be transferring our entry from here to here. And we will be let's plan the trade from this level to this level. So this will be the levels over here. And this is 204. So I'll be putting up limit orders. As you know that our strategy is based upon the limit order itself. So once the price gives us a good entry confirmation, only then we are able to take the entry towards the upside. Right now, after taking out the internal equity, the price is continuing towards the downside. It is taking a good retracement towards the downside, and that's what expected as well. It's a good nature if the price continues to go towards the downside because we can get good RR towards the upside. Once the price retraces deeper towards the downside. So if the retracement is deeper towards the downside, then there are high probability of good profits towards the upside. So let's move the entry towards the next candle. Let's see, this will be the new structure 743. And this will be the stop loss area. So if you want to use the same broker, because as you can see, my broker allows me to calculate its own position sizing. I'm not calculating the position sizing. I am just putting up my entry and stop loss and target, and accordingly, the position sizing is done by the broker itself. So I'm pasting the link in the comment section. You can actually use the same link to open up your broker account if you want. So let's see if we get the entry from here or not. 10 seconds, 11 seconds are left. Since entry is confirmed, I have punched up my limit order. As you can see, the limit order is punched, guys. Let's see if we get the entry or not. And the target would be somewhere around over here. So this will be my target. If the entry gets executed, then the price. Okay, so entry is executed now. The first order has been punched. And as I told you, what we are expecting is that after a deeper retracement towards the downside, we are expecting the price to go towards the upside. Okay, so high probability says that the price should go up and give us the target. And if that doesn't happen, then what will happen? That the low probability says the price will continue the retracement towards the downside and will take our stop loss. So this is systematic trading. Okay. what we are doing is we are following the market structure, institutional market structure over here. And if you want to learn more about it, I have uploaded a video over here. You can go into the previous section and retail money the smart money concepts, retail market structure. You can use this video to understand how I'm drawing the market structure over here. Okay, so I have put up all the knowledge on this channel itself. So subscribe to the channel so that you can get all the knowledge for free of cost over here. And you will be able to apply the same logics that I'm using right now. So as I told you, low probability says that the price should go down and the high probability says that the price should go upside and take upside. Okay, so let's see if the price continues the retracement or gives us a target. Since it's in our stop loss area, let's see a little space for the spread. So I'm just putting a little space for the spread itself. Okay, so price is still in the stop loss area. It's trying to, it already took out the 90% of the candle. But because there was a little gap for the spread itself, the price didn't take out the stop loss itself. Okay, so that's what you need to understand while trading practically. These are the smaller points that you have to take care of. If you would have just put up the exact stop loss on the low, then there is a high probability when the price comes nearby, the spread takes out the order. Okay, so it's again going to the, you can see that the profit area. So let's see and wait and how the price does it or how the price calculates. So we have punched our first order out of the 5 orders. Let's see how the price behaves. Price is already taken out the internal liquidity again. Okay, so this will be the new internal breaker structure. So let's mark till the time the price is doing its own course. We are going to mark the structures as well. So this will be the internal breaker structure if the price goes downside. Okay, small stop loss. As you can see, the stop loss has been hit. The price gap down. Let's see the closed orders. So first trade, as you can see, it has given us a good stop loss. Okay, so first trade was a stop loss over here. And it was a small stop loss. As I told you, we are taking only 1% risk every trade. That's why we are not going to lose any big amounts over here. So this is now the new internal chalk. If the price goes above, then we are looking for selling entries in both the cases. So what happened over here, since the structure has internal structure, if you will look over here, the prices started giving us a deeper retracement in the market. So now we're expecting that the price might continue towards the downside and take out the downside liquidity. And while going downside, it can also hunt the Asian low. So let's mark the Asian low as well. Once the price started over here, this is the major Asian low in the market. Okay, this is the Asian low. And the same way, it is the Asian high. So we are marking the major liquidity points. We are doing liquidity trading using the concepts of smart money over here. And this is the Asian high. Okay, right now the price is highly consolidating in the Asian session. As you can see, the price consolidated a lot. And because the price gave us a good structure towards the upside, first trade we took was a continuation. The price was moving in a series of higher highs and higher lows. And after a deeper retracement, we expected the price to go upside. But that didn't happen. Rather, what you can see is that the price changed its course of direction towards the downside. So that is also a high probability what happens sometimes, that the price might not continue again. All the thing about the trading profits is you need to land on the right side of the probability and on the high side of the probability. So once the price was creating an upside direction, after a deeper pullback, we expected the price to go up, but that didn't happen. The price took out a deeper retracement towards the downside. So this is the next conjecture. Now, what is the price trying to do? The price is trying to give us, you can say, momentum towards the downside. And accordingly, we are going to plan our buy or sell trade. So let's say if the price again gives us a deeper pullback towards the upside, then we can connect towards the downside. Thus, the next target will be towards the downside. However, let's say if the price continues towards the downside, then again, we will be looking for a buy opportunity towards the upside. So this is how we understand the liquidity point. So since this external liquidity was taken out, we expected after a retracement, the price will take out the external liquidity again. But no, what did happen over here? Price is creating internally lower highs and lower lows. That means you can see that the downside direction is being predicted in the, you can say, smaller time frame. Hi everyone, those who are in the comments. Join our live trading, guys. We are trading live on the gold itself on the trading mindset mentor over here. You can enjoy all the live trading, and I'll be putting real trades. This is real money, and we are trading professionally with the objective setup of the SMC itself. So let's fill in the journal now. So today, I think the date is 17th August, and session is London. The first trade was iChalk, and we took a normal buying. There's a -1, -5.08. It was a losing trade. I'll put up the screenshot later. Okay, I think I should have done it over here. Yeah, this one. And let's delete this. This will be used in the New York session. So this is 17th August London session over here. That's what we'll be trading on. The first trade becomes a loss. Now let's see if the price gives us a good pullback towards the upside and we can take a trade towards the downside. Price is trying to go upside, taking a deeper pullback towards the upside. Let's see if it gives us an internal liquidity. So now this new high becomes the internal liquidity again. If the price takes this high again, let's say the price continues like this, then we'll be looking for a selling entry in the market. There's a lot of liquidity, as you can see. All the smart money traders can understand this. And if you're new, you can understand the concept as well. There's a lot of liquidity below these losses. Okay. So what happens is below these supports, there's a lot of stop losses being placed over here. And that is why high probability also says that if we get an entry towards the downside, we can expect the price to take out all of this liquidity at once. So let's see if that happens and we get a good entry from our entry point itself. Those who are joining new, welcome guys. Subscribe to the channel, The Trading Mindset Mentor. We are live trading on the gold itself. And we are doing it with real money, small trading account challenge so that you can understand how to trade objectively in the market. We're going to have proper stop losses, proper targets, and along with we are going to fill the trading journal. So as I told you in the first trade, after a deeper pullback, we took a continuation trade which didn't work out. So we put the same into the trading journal and we have put up exact loss or profit that has happened. So if you're trading with me, trade professionally, have a professional outlook along with the trading psychology so that you can understand, you can reflect back on the journal post the trading itself. Someone is asking in the comment section, which broker are you using? I'm using the XNS broker, one of the very verified brokers. I am putting the link in the description as well. You can open the same software. This is a zero spread account. As you can see, this is a single line. And wherever we punch the orders, we get the exact entry or stop loss. Okay, so that's why I use this broker itself because none of the brokers are using the exact raw spread. They have some spread, and because of which my calculations are not perfect enough. And in the zero spread account, wherever you put the exact order, there is a single price over here, not two prices. So one person is asking, what are we waiting for? So as I told you, what is happening is that externally the price was in upside direction, because of which we took the first trade in the continuation trade. However, internally, what did happen? The price started creating a series of lower highs and lower lows. So we are waiting for the price to give us good one liquidity towards the upside, and accordingly we can enter towards the downside. So as you can see over here, what did happen? Look at this. The price tried to sabotage the previous resistance in the market, and that's what we are expecting. The price to take out the liquidity, only then the selling will be a good way. Otherwise, what does happen is, if we don't care for the liquidity and we directly sell from these levels, price usually takes out your stop loss and then continues towards the downside. So price is consolidating right now. As we can see, it is trying to move in a range like this. So what we're expecting the price to do is to actually trap the buyers itself. Once the price starts going towards upside, high probability is that the buyers will kick in, and then we are looking for selling opportunity towards the downside liquidity. So as you can see, the price took out the internal liquidity, which we were expecting to do for the price. Now, what we are going to do, we are going to look for a selling opportunity. If the price goes above this level, then we will wait and sell again. So we are expecting the price to go till over here. So let's see. This is 9, 8, and with little space towards the upside. So if the entry is confirmed over here, we'll punch our order towards the downside. So price is, as you can see, taking out the upside liquidity. Internally, again, what is happening? The majorly consolidation is happening within this range. So internally, as you can see, that the price again took out the internal liquidity from this level. So now this is the external liquidity towards a continuation, and we can expect the price come like this. So we'll be selling from these levels. If the price takes out the external liquidity over here, then we'll be looking for continuation trades towards the upside zone. So price is about to take the external liquidity. So price has taken the external liquidity towards the upside. So we are not going to take a sell order now. We are looking for buying confirmations because this is a new change of character. So as we expected, after taking a deeper pullback, the price should have gone towards the upside, but it took a more deeper pullback to hunt the stop losses of all the buyers and then started moving towards the upside. So in such cases, you have to remember for your trading psychology purpose that uh, price will take out your stop loss. So sometimes people will feel I should have sold from the last 90% order block or something like that, making new concepts. whatever you are doing, it is much more correct. If the price wants to take a more deeper pullback, it will. Nothing you can do over here that could have saved your stop losses, because after this swing, the price created another swing, took out more stop losses, and then went above in panic. So this is a panic situation. As we can see, even if you have put orders over here, this was the last support created, the last order block created, the price never mitigated this. Rather, what did happen? The price continued towards the upside. So this is what we need to expect in our case itself, that sometimes the price takes panic situations after hunting your stop losses, and there's nothing you can do about it. You have to accept the stop loss as it is. So now what are we expecting? We are expecting the same procedure. We're expecting the price to take a pullback and then give us a continuation direction towards the upside. So now the price, as you can see, giving us a new higher high over here, has created a new internal liquidity. Once the price takes out this liquidity, then we can expect a good buying again, or we can, you can say, plan for buying it. Hi, Forex Bible. Are you trading smart money? Yes, we are trading on the concepts of the smart money itself. So as we can see, what had happened, the price again took a continuation upside. Okay, so price is not retracing anymore. So once the price starts retracing, only then we'll be planning for a buy entry. High probability is that the price might try to target the Asian high today. So this is the Asian high exactly at the level of 4416. So there's a lot of consolidation going on towards the downside. Once the price takes the Asian high in the market, then you will see that the price might try to go towards the downside in the second half of the London session, and there will be a good retracement towards the downsides. This was a new last buy leg form. Let's see if the price takes out inducement internal equity, and then we'll be planning for buying towards upside, and we can target till Asian high. Price is panicking towards upside. What we can see is that there was no entry in the formation from this. This is a whole panic move. This is a single buy leg being formed, and also known as the hunting leg. Why? Because as you can see, there is no much retracement in this leg. Look at the retracement in this leg and look at the impulse of this leg. Okay, so sometimes the impulsive disorders happens in the market, and the impulsive legs are being formed in which the price just tries to hunt the previous stop losses, whatever the like X traders have put over here on the stop loss area. So what are we expecting now? The price to give us a good like internal equity hunt towards the downside, and then we will be planning for the buy trade, and we can target delation session high. Thanks a lot. Good comments coming in. People are sending us hearts. See, that's the virtue of patience as well. Not all the time you have to be in the trade. Most of the time, your work is to wait for the perfect entry and exit. Someone is asking, how do you maintain your psychology while trading? I try to forget my girlfriend then. Just joking, guys. So maintaining trading psychology is basically following your own rules. You have to be very, very strict to the rules. Whatever rules you frame up, it's all as per your free will. However, the free will cannot be induced in the market itself. So plan your trade, first of all, and then trade your plan. That's the only rule. That's the master course. If you want, if you ask me what is this is the master course of the trading psychology, summing up in two lines itself. Plan your trade and then accordingly trade your plan. So now the new inducement level has been shifted to this. So price is trying to move towards the downside. Let's see if the price takes out the internal liquidity or still move towards the upside. This is the new internal liquidity the price has created. So price is continuously moving towards the upside without taking any sort of internal liquidity. And that's a panic leg. Okay, that's what I was discussing right now. This is known as the panic leg or the impulsive leg in the market. When the emotions pile up so much that they cannot handle themselves or the logic cannot handle themselves, then the logic defies in the market and the impulsive legs are being formed. So let's see if the price now is consolidating, creating a M pattern over here. So if you can look, this is a double pattern that the price is creating. And we are trying to trade on smart money concept. So if the price breaks this neckline over here, then we will be planning for a buy entry and we can target relation high. A good risk reward will be there in the market. So now this is the new inducement level that the price has created. And post the inducement has been taken out, then we will be planning for the buy trade itself. Please do hit the like button, guys, and subscribe to the channel, The Trading Mindset Mentor. We are live trading every day on gold itself. Every day, new subscribers are coming in and they are actually making good profits with us. So you're most welcome to join the live tradings and learn the objective trading setups. So we are using the concepts of SMC and we are trading it objectively. That means whatever the price tells us to put up the stop loss of the target, we are doing the same and collecting the pips on a regular basis. So finally, the price has taken out internal liquidity of the downside. So this is the major internal liquidity that the price needs to be taken out to confirm this as the breaker structure. Okay, so this is the new breaker structure. If the price takes out this internal liquidity, then this will be confirmed external liquidity. Right now, the price is consolidating within this range. The price created a new lower high, lower low. Okay. So we need the price to take out this internal liquidity. Only then this will be considered as an external liquidity. Otherwise, it will be continued as a panic leg itself. So first, let's wait for the internal liquidity to be hunted. So let's see as the price is consolidating and if the price takes out the internal liquidity or not. Only then we'll be planning for a buy trade. That's what I'm looking here for. The price created a good pattern over here. We're expecting the price to create break this low and then give us a good momentum towards the upside. So as we can see, guys, the price has finally took out the internal liquidity, which we was actually waiting for a long period of time. And now this will be the new external liquidity that we can expect the price. So we are planning for a buy trade. We'll be planning a buy trade from these levels if the price confirms the major order block from here, and we'll can target till Asian high. Okay, so we can expect that the price can take out the Asian high itself. So this will be 1:2.71 hour trade. So let's see what happens. Let's mark the trade. This is exactly 432, and the stop loss size will be over here, and this will be $5. So 1% risk on this same account. So I'm using the $5 stop loss over here. If the price goes, if the price confirms the order block, then we'll be taking a buy entry. If not, then the entry will be planned from this candle itself, new candle. Okay, so now let's plan the new. Okay, so this is 5.944, and the stop loss will be over here, giving some space. Let's see if the price confirms the entry or not. First target will be the breaker structure, and the major target can be the Asian high itself. So it doesn't look like that the price might create some order block over here. So now we will be shifting our entry. So this is 5.096. And the stop loss will be somewhere over here. So that's why I'm using this broker. As you can see, the position sizing calculator is already there inbuilt in this broker. And it's also a zero spread account. So there are major benefits of this broker. That's why I'm using it. It's not a sponsored video, guys. It's just my own choice that I'm using this. I put up the link on in the comment section. If you want to use the same broker as your own, you can open up the account using the link. So let's see if it confirms the entry or not. So it didn't. Now let's plan from this levels. This is 982. And the stop loss will be on this. So since the price has taken out the internal liquidity and taken a deeper pullback, we are expecting the price to continue towards the upside, and that's what we are planning for. So this is the plan for the next entry towards the upside. If the price creates a bullish order block, only then we will be taking the entry. Sometimes the gold gives us good momentum. That's why we have to be very much sure that the entry is confirmed. Okay, entry is confirmed. I have punched up the order. As you can see, I have put up my limit order, punched my limit order. Let's see if it gets executed or not. So the limit orders, the main thing is you have to remember limit orders doesn't give you the slippages, and that's why we use the limit orders. Okay, if you use the market orders, there is no exact guarantee of the price. But when you're using the limit orders, there is exact guarantee of the price that the price will come exactly at the level of 4.982, and only then the entry will be done. However, sometimes you will see that limit orders, the con with the limit orders is that sometimes the limit order doesn't get executed and the price panics towards the upside. Okay, and you will not get the entry. So both pros and cons are over there. Okay, as you can see, my order was mitigated. However, it didn't execute. Okay, now it is executed, guys. So it is executed exactly at the level of 982. Okay. So this is our continuous stop loss, and the target will be on the upside. The first target you can put it over here. Okay. And the major target you can put it on the Asian session high. If the price goes towards the upside, then if the panic move is there, I will be shifting my target to the Asian high. Otherwise, I'll be moving till the major breakout structure. Low probability says that the price will continue towards the downside and take a deeper pullback, and then we'll be planning for the next trade. Let's see how this behaves. Okay, so let's put in the high. Exact high is 11.498. It's 11.498. So let's put it 5. Let's see if it gives a stop loss at the target. So second trade for the day has been executed. This was the first trade where we tried to take a continuation trade like this itself. And you saw that the price take a deeper continuation and then went towards upside. Okay, logically. Now, again, after a good retracement, we started taking a continuation trade. So this is about the probability. High probability says that the price should continue upside, and the low probability says that the price will go towards the downside. So all the things in trading that you have to land up on the high probability side. That's it. The trade might or might not work out all the time, but you will not be in regret or any kind of psychological emotion that might come out later that you were not following your trading setup or you didn't follow the rules. Majority of the times you will see traders that the trading psychological problems are because that you're not stick to rules. You're trying to trade on the impulses that you are being or emotions in your body, and that's why you get more emotions. But once you're trading logically with the objective setup like this, with a proper stop loss and a proper entry and proper target, you will see that your body will also give you the same signals that yes, you are doing something very well. If the stop loss happens, that this stop loss happened. Okay, so for example, the first trade we took and the stop loss triggered. So in this case, many of the traders will find, some sort of reason to become sad. But there is no point of getting sad when the stop loss is hit because you were just following a setup, and this is not you who got the stop loss. This is your setup and this is your strategy which actually resulted in the stop loss, right? So there is nothing you can do about it. You are just following the setup, and either the setup will be profitable or the stop loss will be there, the target will be there. In both the cases, your emotional psychology or the trading psychology will not get interrupted because you are following something else. Okay. So whole point of trading, maintaining your trading psychology, who someone is asked in the comment section as well, that plan your trade and trade your plan. That's it. So I planned my trade. I told you that I'll be trading after the inducement has been taken out. I'll be taking for a continuation trade. And what did happen over here? I traded my plan and now another stop loss happened. So that's okay. Why? Because I followed my plan. So this is another, I think, one stop loss over here, and we lost around 4.75. Okay. So we'll be putting in the trading journal. Now we'll not do anything. We will wait for the another good entry to come, or the internal you can say chalk to be created in the market. So once the price creates something like this, then we will be continuing towards the upside. So let's put in the next trade. We took the breaker structure, normal entry -1, -4.75. So that's the beauty of following a risk management. You're losing just 1%, in which there is a negligible impact on your real capital. Let's see how the price behaves. So price is still retracing downside. So let's move it over here. Price is creating bigger swings. However, whenever there is a new entry formation, the price is actually consolidating again. If you will look, this is not a kind of a trending market that you expect the price to give any profits or losses. Both side profits and losses are being hunted in the market. Okay. So in such a type of market scenario, the risk management becomes your major best friend because it is not letting you lose more than you should. Okay, that's what the major perspective is. It is not letting you lose more than you should. Okay, guys. And that's why you should be focusing on the risk management first and then the profit management. Because some days there are markets runs like this. Some days, if you look at the previous London day session, so till the time some things are happening, I'll show you the previous London day so that you can understand how the price behaved in the on the Friday itself. So let's move on to the Friday and let's see from the 12:30 onwards. I'll show you some markings how the price behaved in the London. So this was the first breakout that the price happened towards the upside. Price gave us the internal structure over here. And this was the major again breakout structure. Then the price gave us a good chalk over here. There was no entry. And the first entry happened to be from this level. This one. So this was the first -1. In the previous London session, I'm doing the backtesting along with you so that you can understand how to do the backtesting itself. Okay, then there was another chalk in which we take the continuation trade. So this was the continuation trade first of all. So this was the continuation trade and we worked out with the 3. This was a new breaker structure. Again, the next structure happened from this level. The next trade came from this level, I think. Just hold on. Yeah, this one. Okay, and this one, and the target was to the exact level of the upside. So this was 6 in the previous London session. I'm talking about the last day till the time market is consolidating. And then this was a new breakfast chalk that the market happened with. And exactly with the chalk, there was another buying entry from this level. So these were the good trades that happened on the previous day London session. So this is how the market behaved and gave us the good profits. These are the same trade or the same exact trades that have been happening today. So rather than looking at the London session, the market continued downside and then continued upside. And since now we are taking the same entry, the market is retracing deeper and then going towards the upside. So some days this will happen, some days these things will happen, which is happening right now. Okay. So in both the cases, you will have to be very much sure that what are you doing and whatever you're doing, you get the best results out of you. But for that, you all have to, I think, stick to one thing again and again. That's it. So this was exactly when the London session started. So I'm marking the London starting. So now what exactly we can see from here that the price is about to take out the external liquidity towards the downside. Okay. If the price takes out the external liquidity towards the downside, then what are we looking for is a reversal trade towards the upside. We will be taking a higher risk reward trade towards the upside. Since this is a smart money concept, live trading, guys, you have to remember that we are trading for high risk rewards. So our winning ratio will be less than or equal to 50%. Okay, I'm telling you beforehand, the winning ratio is less, but the average risk reward that we are looking over here is minimum 2.5. This is the average risk reward in which sometimes even the trades which we get is around 1:7, 1:8 as well. Okay, minimum is 1:1.25. So this is how I have designed the trades over here. Now this is the new internal chalk that has been formed over here. There's the price took a deeper sell leg over here. As you can see that the price took a deeper sell leg, and now price is taking a deeper retracement towards the upside. So either it will continue towards the downside and take out the external liquidity over here, or it will try to move towards the upside again and take out the external liquidity over here. So this is what you are waiting for now. So somebody is complimenting in the comment section. You explain the concepts with a lot of simplification. Thanks a lot, guys. Those who are live trading with us, do subscribe to the channel, The Trading Mindset Mentor. We are live trading on the gold in the London and the New York session. I've uploaded the news analysis video for this week. Go watch this video in which we have covered all the important news that is going to be in this week for sure. So I'll try to come on the 6 p.m. live trading news itself. We will be doing live news trading itself as well. So till now, we are doing the scalping trading on the gold itself. So do join the channel and have much more fun. So let's plan for the further trade over here. What we can see that internally the price created another sign of leg over here. So we can expect if the price goes below this low, we can plan a buy entry again. And secondly, you can look for buying entries or downside entries from the iChoke and the chalk level as well. So let's see, the price is consolidating within our range. So I'm not trying to take a risky trade over here. So since the price is in a very high consolidation mode, we will have to wait for the good entries to be created because there's a lot of liquidity being created on the upside and the downside as well. This is a major liquidity upside. This is again a good liquidity on the downside level. This is a good liquidity and this is a good liquidity itself. So I think we will have to wait for some structure to be broken, either the internal or the external liquidity to be taken out, and then we will be planning for the next trade. So guys, there's a lot of consolidation going on. Just wait for any of the liquidity I have marked before to be taken out, and then only we'll be planning the next trade. Otherwise, there's a high probability that you will be your stop losses will be hunted. So as I told you as well, that the major work in the trading itself is to wait for the perfect entries and exit. Those who are watching the video, please hit the like icon. We're live trading in the gold itself, and with proper risk management and money management and technicals management. Do subscribe to the channel, The Trading Mindset Mentor. We're live trading gold, and in the section, we will be live trading on the news trade itself. So today, 6 p.m. Canadian news dollar news is coming in the live, and we're live trading on the. We will be joining at 5:55 p.m. So be there on time. I'll soon be sharing a Telegram link in which you will be having the real-time updates of the channel. Let's see how the price behaves. Price is highly consolidating. As you can see, it's within the range. We are only two trades out of the five trades set up. So we are still waiting for the good entry. Once any of the liquidity points will be taken out, then only we will be planning for the next trade itself. That's what's telling you. Price showed you here that a good buy leg came in, but finally the price took out the stop loss again. So there's no point of trading over here. The price is taking out the stop loss of if you're buying again, then you're taking the stop loss. If you're selling, then it is taking the stop loss. So you will have to wait with surety that yes, this is my entry or exit point. So as I told you, once the price takes any of the liquidity lines that I have marked over here, then only we'll be planning the next trade. So as we can see now, the price is taken out the internal liquidity about to, and post this we will be planning the next trade. If you have any question, guys, you can put in the comment section. No, this is the new liquidity level. Price is already taken out. I shop. So we'll wait for the candle to close and then we'll be planning the next trade. There's a high chance that the price can take out this external liquidity as well. So let's see what happens. We will be planning a buy trade from this level to this level. There's a lot of upside liquidity I can see over here. This is one, this is two, and this is three, and even four. So these are some similar points that we can expect that the price can take out towards the upside. Let's see what the price will show us. Let the price candle get closed. And it might also happen that the price take out this external liquidity as well. So we'll be planning the trade from this level and we'll be targeting to the major liquidity. This is a 4 hour 4 risk reward. So let's plan the trade. The entry point will be somewhere over here and the stop loss over here. So this is exactly 449. If the price takes out the external liquidity, then we'll be planning the next trade, not from this. Okay, 1% risk. So this is 1.320 and stop loss that we have put Should be 2 points below. It's 129. Yeah, 9. So I think the external liquidity will be 100 as well. And then only we'll be planning the next buy trade. It's still pending, as you can see. Price has taken out the external liquidity. Now we are not buying. We will be waiting. So what did happen over here? The price took out a deeper retracement and it took out the external liquidity towards the downside. We expected that price might continue and take out the Asian high, but that didn't happen because price is highly consolidating. It is creating a head and shoulder pattern on a higher time frame. If you go on a 1 hour chart, you will see that the price is creating a new head and shoulder pattern. Okay, so that's what happens. Price is fractal in nature. So what we are going to do is we are planning to take a small buy from here and we will expect the good liquidity to be taken outside, okay, or from the above. So let's plan the trade. Let's wait and watch where will we get the buy entry. So we can plan a high risk reward trade from here. So what we will be doing is we'll be taking a buy from here, putting a stop loss over here, and we can target to the external liquidity upside and even the Asian high. So this is the new target, 1:14. Let's see if the trade works out well. Always remember, guys, when the targets are high or risk reward is higher, you always expect that the price, the winning ratio, the probability of winning will be lesser. This is 588. And stop loss will be for $5 around, and the stop loss somewhere over here. So let's see if the price confirms the entry, then we'll be taking a buy. Otherwise, we'll be watching for the next candle. Still going down. So it's 1,355, 155. We will be putting it on 0.55. We will keep some space. So as you can see, the order block is not confirmed. So we are going to plan the next entry from this level. This is 396,342. And stop loss somewhere over here. Four, 3.5. You're putting on 3.5. Stop loss somewhere over here. Let's see if it confirms or not. It will be a good risk reward trade, as we can see. The risk reward is around 1:14 or 1:12. 15. So let's see if we get the entry or not. Price is sometimes highly fluctuating, so you will have to remember you have to be very quick with the entries. So price didn't confirm the entry. So we'll wait. Let's see if the price gives us entry now. Price is still going down. No entry anywhere. Now we're planning from here. Let's see what happens. This is the third trade. This will be the third trade for today. First two trade happening stop losses, and we have generalized the same over here. in our trading journal. So we are regularly filling our trading journal along with. Price didn't confirm the entry. Now we'll be moving forward with the next candle. Price is still going down. So no hurry for buying entry. Price is in no mood to reflect back towards the upside. Price is still retracing downside, might be taking out the internal liquidity or the external liquidity from the downside. As you can see, there's a lot of liquidity on these levels as well. Let's see how the price behaves. Still draining down. Today, a lot of panic moves happened. As you can see, there's a lot of panic move. This again is a good panic move towards the downside. So we'll be shifting our entry now. Has the price taken out all the internal liquidity? No. There's a lot of pending liquidity as well. Let's see how the price behaves. Buy, I'm expecting a good buy because this is a good panic momentum towards the downside. So even if the price wants to go towards the downside, it has to retrace towards the upside. And that's why I'm taking a good buy trade over here. And if the panic lick continues to go upside, then it will be a good risk reward trade itself. Now we'll be shifting the entry. If the price doesn't confirm the bullish order block, then there is no point in taking the entry. We need the bullish order block to be there. Let's see if we get an upside confirmation or the price tries to create a new lower high lower low. and see if it creates it or not. So it didn't create it. We'll be moving entry upside. It's 401. Stop loss was over here. It's price is still trying to flow downside again. So I think it will collect all the internal liquidity over here. This will be the last internal liquidity as per the records. Let's see if it gives us a buy entry, then we will have to take a buy. So it didn't as such. Let's plan the next trade. 015. Stop loss is somewhere over here. This is, I think, an inducement itself. So this will be marked as a breaker structure if the price breaks upside. Yeah, this is a good breaker structure now. Below this, the external liquidity is created. If it confirms the entry, then we will have to take a like a buy order. Okay, so I have punched the entry. Pending order is placed now. Let's see what happens. I have taken a very, very small risk, as you can see, guys, 1% risk per trade so that you don't lose much. If the price goes down again, then you will not lose much. But if the price goes up, then we can expect the target to be around for 15 hour. This is the major target. If you ask me, this will be our new target. Yeah, something like this. So this is a very high risk reward trade, and the chances for stop loss is also high. Stop loss is $4 and the target is $52. Okay, this is 1:10 trade, I believe. Yeah, 1:10, I believe. Yeah, around 10. So let's see if this works out or not. Because if this goes down, then the price will create a breakout structure towards the downside. We'll delete this and wait and watch. High risk reward trade means low probability of winning. Always remember this. There's an indirect correlation between high risk reward trades. The risk is $4 and the target is more than $52. So we can get 1:10 risk reward if the price gives us a panic momentum again, like this panic momentum was created. If the price creates a panic buy leg over here, then we can expect the same move over here. So let's see how this trade works out. This is the third trade for today. We have punched the third trade. We have next two opportunities as well. If this trade doesn't work out, we have still two opportunities left with us. And going upside prices a lot of buy stop losses, because traveling upside means the price should have a lot of stop losses. This is one, second level, third level, fourth level, and this is the major level over here. So it can go down or it can go up as well. Both sides we have good fuel. So price is retracing again towards the downside. So there might be a stop loss as well, but within the risk management itself, 1% per trade. That's it. So if the price breaks downside, then we are looking for a continuation trade again. As I told you, we will be taking 5 trades. The maximum risk for any day is 5%, and the maximum reward can be unlimited because our risk rewards have no limits. This is a 1:10 risk reward trade, guys. The probability of winning is highly low. I'll not say any false statement because there is a indirect relationship between these things. If you have a good risk reward trade, then the probability of winning is less. If you have low risk rewards, the probability of winning stays high. So whenever I ask you to properly manage your risk, that's why I'm doing it. If the price creates any internal liquidity in between, then we will have to shortcut the trade. So for example, if the price creates something like this, then we will have to shortcut the trade. If the panic momentum happens, then we will be taking 1:10 full. Price in a stop loss area again. So now because the price created an internal liquidity over here, the maximum risk reward has to be shortened down. So that now the new target is not that, it is over here. Because price created an internal liquidity. So do remember, okay, we will have to play by the rules of the market, not our own rules. This was a high risk reward trade, but the price created internal liquidity, signaling that if the price breaks up this level, then it might move towards the downside again. Okay, staying in the stop loss area. Let's see how this behaves. It's very important to play by the rule book. Since the price created an internal liquidity, we have shortened our trade to 1.5 hour. And why is it happening? Because this internal liquidity is signaling that the price might go towards the downside again. So let's see if we can get this target. Small target, high probability of winning. This is what systematic trading looks like, guys. Sometimes we get good risk reward, sometimes we get minimum bear risk reward, sometimes we get stop losses. However, there is no impact on your trading psychology because you're following your rules. The rule says if the price creates an internal liquidity again, then we will have to respect that rather than fantasizing that we can get the whole risk reward towards the upside. It might or might not happen. But what is certain in front of us is this internal liquidity. Price is consolidating, and that's why we will have to rethink our strategy. Okay, if the price would have given a panic like before, we would have targeted the whole 10 RR. So we hit the target. Third trade was a target. We shortened our target. Why? Because the price created an internal liquidity. Now we'll be looking for shorting again. This was a good target over here. Small but unique. And we'll be targeting towards this liquidity. And let's look at over here. This is a sell trade and a pending market order. Stop loss will be over here. This is 700. Stop loss exactly over here. Let's see if the price gives us entry towards the downside again. Some people have booked the targets. Very well done, guys. Small targets are targets. We have 1.33 RR we have taken over here. This is a good risk reward based on the calculation. So now let's see how the price behaves, if the price goes down or not. Profits booked. Very good. Okay, so now let's plan the next trade from here. So price didn't give us the entry. Let's plan from next. Higher the retracement, better the target will be, because we know the target is good. We can put it over here. This is 169. Stop loss will be over here. Let's see what happens. Still no entry, guys. Wait for the next entry. High expectation is that the price should go down, take out all the downside liquidity, and then we will be looking for buying again. The price consolidated over this level. That's why we have to shortcut the bigger risk reward trade towards the downside, and we made some good profit over here. So that's the fuel for your next trade, guys. Don't make it as a profit, because this is a one single small RR over here. So as per my psychology, if you ask me, the small trades, I, uh, keep them, or I mean them as fuel for the next trade. Okay, price is shifting towards the upside. Now we'll be marking from these levels. This is 882, 878. Price is trying to move upside. So price is jumping upside. Okay. Many traders are thinking why we close the trade. You'll get an answer very soon, because we need to focus on the liquidity levels as well. So we collected some profits and we are fueling for the next trade. And there's a little bit chance that because this all internal liquidity was there, however, this is still pending. So we can expect that the price might try to take a U-turn towards the downside, and then we will again be buying towards upside. However, let's see what will happen from here. This is 97.5. Stop loss will be around over here. Price is creating big candles. The panic momentum happened. The target, this trade is also good. The target will remain exactly at this level. So this will be 2.38 RR. Price is not confirming the entry. So we'll be moving upward. Higher the entry level, bigger the risk reward is. That's the beauty of this broker, guys. It's calculating. If you can see, it is reposition sizing itself again and again as per my risk. And that's why I told you it's not a sponsored video. I like this broker a lot. I have put up the link in the comment section. You can open up the same account with the same broker. It helps me a lot with this position sizing calculator. Price is drastically moving towards the upside. London session was confusing today. You'll wait if we get a retracement towards the downside. So let's plan the entry from here. 232. Let's see if we get the entry. Price still wants to move upside. Okay, let's see if we get a confirmation from this entry. High probability the price is broken the low for the first time. Okay, so we have to sell now. I have sold and I put my stop loss over here because my limit order was not punched. So I have put up a normal order. We'll add two more, I think. I've added two more positions to make it a $5 stop loss. Okay. In both the cases, the target will remain towards the downside. My limit order didn't work out, and that's why I'm doing it by hand. Okay, this is my target. First target will be this. So let's put up the targets. There are two direct orders going in the market along with. Take profit will be around 439, 4393.287. Let's see if we get the stop loss of the target. I've taken a total stop loss of $5, and the target is good. If you can see, the target is around 4.56 hour. I'll put the target for the second trade as well. So we'll be targeting 4393.015, and the stop loss is 44,582. Okay, so I've now combined both the positions so that I don't get any problem with the same. So we'll combine the stop loss target again to 4393.287. So that's why it was important for us to take out the position. Now, as you can see, it is now drowning again. Okay, high probability says that the price should go down, and the low probability says the price should go up. Okay, so let's see. A risk reward is good. 4.56 R is a good risk reward. I have taken an entry from a little bit upside because of the market order. This is our fourth position, guys. First two were, what is my target level? Someone is commenting. It's 4393.287 in my broker account. If you're using some different broker, use the same candle of 1431 and the low of the 1431 and put the target on the low. Okay, so first two trades were stop losses. One stop loss, two second stop loss. Third trade was target. We shortened the target with the internal liquidity, and from there we started again selling. Okay, and this is the risk reward of 4.56. Higher the risk reward, lesser the probability of winning. However, there is a good pips that is going on there. So let's see how we will be able to manage the situation well or not. Because price was consolidating, we had to take a down trade again. It was a panic momentum. The price consolidated over here, and it showed that the price really wants to go downside again. So today has been a very consolidation day, but because I'm sticking to my rules, I'm getting good profits and good pips as well. I'm managing my portfolio well. So let's see over here, guys. It's created an internal liquidity again at this level. So we will have to shorten the target now to maximum this level. Once the price starts consolidating, we have to be very strict with the target sizing. We cannot expect good targets when the price is consolidating. So I have put up the target over here. It is still a good RR, I believe. It is around 1.67. So let's see what will happen now. Because the price starts consolidating, we will have to short the targets. Like this momentum happened and we shortened the target over here. That's the exact same principle we are applying over here. We had a good target tools towards the downside, but because price has started consolidating, we had to take care of the internal liquidities as well. So let's mark the exact pricing 0.7779. Okay, so let's see if the price gives us a stop loss or the target. Lower the lower the risk reward, higher the winning ratio or higher the possibility of the winning. See, that's why I shortened my target because price is highly consolidating. Rather than giving penny panic moves, price is consolidating within the range. Okay, the target was clicked, however. Okay, so target has been done. As you can see, another two profits came. So from last three orders have been full targets, 4.94, 4.96, 6.14. Okay. So this was 1.67. This is the internal structure that we have seen over here. And now the price might move towards the upside or downside. Because the price is internally moving, we will be waiting for the next entry very specifically. We cannot directly trade towards the upside or downside. So we'll watch if one of the levels get breaks out, either towards the upside or towards the downside. And accordingly, we will be trading, making profits, hitting the targets. Comment section is good, filling by likes. I hope you are liking the video, guys. Please hit the like icon. We have made another profit for today. The people are happy with another target. I know we have expectations for good targets, but sometimes when the consolidations happen, we have to stick to the lower targets as well. We cannot stick to the big targets all the time. You're on fire. Nice. Subscribe to the channel, the Trading Mindset Mentor, guys. We are live trading in gold in the London session, and you will be highly enjoying it because we will be live trading at 6 p.m. as well when the Canadian dollars news will be there itself. So one last trade to go, and let's see how big the trade can go or not. So first trade was stop loss, second trade was stop loss, third trade profit, fourth trade profit. If you look the today's trading journal, let's fill up the trading journal. So we got the stop next target for I think chalk, and we got the normal entry with a I think 1.3 RR we got over here, which is around $6.25. So let's fill up the journal till we have time for the next trade. 6.14, and it was a profitable trade. Next trade was iChalk, that was for normal, and then we made around 1.67 R. In this trade, we made 4.94 and 4.96. That's exactly $10. So 10, and this was also P. So today's earnings, if you will go with the same rule, we are positive, I believe. Yes, we are positive $6.232. Don't focus on the dollars, focus on the risk rewards. And how much R are you making? Because I am trading here live. For that, I have taken a small trading account. If your trading account is $5,000 or more than that, try to take 1% stop loss, and accordingly, we'll be making some profits. If you're using a funded account trading challenge, guys, try to remember the stop loss sizing on the same should be 0.33% and not 1% of the total capital. This is one of the biggest mistakes that funded traders do. And I'll make a video on this very soon, and we'll be uploading on this channel again. And yesterday I uploaded the video for the news analysis. You can watch all the important news that is going to happen on this week. So we have discussed all the news in this video. You can go and watch it for free of course on a channel, and hit the like icon, guys. So let's come back. Let's see how it behaves if the price goes up or down. Somebody is asking, I guess you are going to help me clear my challenge account. Yes. So just live trade with us. Take exact risk proportionate, follow your basic rules of trading, and accordingly, you will be able to get your trading account challenge very clear very soon. So price is moving down with the full speed throttle. Let's see if it goes downside and give us a fade. So let's see how the next trade will work out. We have already established a good framework for today, 2 stop losses, 2 targets, and we have made some good amount of money as well for today. So now let's see. As you can see, guys, the price is highly consolidating, and that's why it was a very good idea to, get the trade out when the nearest liquidity formed. And that's why, because if the price, consolidates a lot, it can happen that it can just take the stop losses of both the levels. And that's why we do the same. Whenever the internal liquidity is being formed, we try to take out the trade there and there itself. So are you looking at the proposition, guys? So initially we targeted the major liquidity over here, right? Exactly like this. But the price consolidated a lot, and still there is a high probability you will see that the price will actually go something like this. So that's why whenever there's a nearest liquidity, we try to take the trades out over here. And if the panic leg would have been made something like this. So if you will remember, this was the panic leg that was made in the beginning, we would have got the full target. So right now consolidating again and again, creating new higher highs and higher lows and lower highs and lower lows. And that's why we took out the target exactly at this area. So last four trades, if you look over here, the first and second trade was stop losses, and then the next three trades were profitable. Okay, so one last trade is pending for today, and then we'll be moving forward with the next Canadian dollar live. So exactly at 6 p.m. you can join on the channel, the Trading Mindset Mentor, and we'll be live trading on the same on the news. And then we'll be trading on the New York session from 7 p.m. onwards. These are the two liquidity levels which we can expect if the price can break. So price is about to take internal liquidity downside. Let's see if we can plan the next trade or not. Okay, so price took out both the liquidity downside. So this trade actually confirmed that the minimum, the risk reward, we got out of here and here, both were profitable. Okay. So now let's see what will happen. As you can see that the price has still not taken out the external liquidity downside. Okay, there's a lot of liquidity on these levels as well. Now there's a probability, high chance as well that the price might give us a reversal from this level. And below this liquidity level, we will be looking again for a continuation trade. So let's see if we can plan a buying trade from these levels. Stop loss will be over here and the target will be on the upper side liquidity. We are looking for buying. Stop loss at this level. This is 5. It's 230. And the stop loss is exact, placed. Very good. Somewhere over here. Now let's see if we get any buying entry, or if the price goes below this external equity, then we'll be looking for a selling trade and not buying. Price didn't confirm the entry. This is the last entry for today, guys. Let's see if we get the entry from here. So that's 45. Stop loss will be over here. somewhere in between. Let's see if it creates a bullish order block, and then we'll be looking for a buying section. Price is not able to stabilize itself. So be ready with the order, guys. Sometimes it happens in the last moment. So it didn't create it. So we're not looking for buying right now. We'll be looking from this candle. Five seconds left. Okay, we have punched the order. Let's see if we get the entry executed or not. And the target for this order will be on the upside liquidity. This is the last order for today. And then we will be calling it a day. Let's see if we get this order or not. And this will be the new shock towards the upside. As I told you, sometimes when we push in the limit orders, there is a low probability that the price might not mitigate the same. Price is pushing upward. Entry is punched. Last order for today. Let's see if we get the stop loss or the target. Please try to understand the stop loss should have a little bit space for spread. And the target is good for now. So I think the target is on the high side, which is 4400, 656. So we modified the target exact. Let's see if we get the full liquidity towards the upside. This is a 3.34 risk reward trade. Please manage your risk well, guys. There's a probability that the price can go down and take out your stop loss and take out the external liquidity on the downside as well. Okay. So higher the risk reward, lower the probability of winning. We have already won 2 trades. Last 2 trades we won. Actually, last 3 trades we won. And 2 trades were stop losses. This was the last trade for today. Let's see if it hits the stop loss or the target. And we'll be closing at break even, I think, today. Somewhat going down. And we hit the stop loss. So last trade was a stop loss again. The price wants to take out the external liquidity downside. So let's fill up the journal. This was the last trade. We took the trade for iChalk. And this was a normal. And A3P. And this was minus 5.05. 5.5. So for today's total earnings are 6.32. Capital, -1, minus 5.5 over here. Yeah, so 0.82, and this was a loss. So 2 trades profitable and 3 trades stop losses. We are still at break even, 0.82. Okay. So in this consolidating market, if you get even this kind of format where you didn't lose your money and you're again at break even around 500 itself with some commissions up or down, we did good for today. Okay, guys, till then, we will see you in the next video. We'll be trading live on the Canadian dollar news at 6 p.m. So come on live, subscribe to the channel, the Trading Mindset Mentor, and we will be live trading on this Canadian news dollar at 6 p.m. and then again live trading at the gold at the New York session. Till then, take care. Hasta la vista. See you in the next video, and do hit the like icon, guys.